What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Monday, May 20th. All right, guys, Tesla stock on Friday finished up $2.62 per share. That's plus 1.5% in regular trading hours. Essentially flat, up 9 cents in the after hours. Either way, take it with a grain of salt. Volume's very low. Let's take a look and pull out everything we possibly can to get a good idea going into tomorrow, Monday, for Tesla. We're going to look at the volume profile, pull out any directional bullish or bearish bias that we can out of that in relation to the underlying movement. We'll take a look at the psychological, self-fulfilling prophecy levels that we, the traders, I think investors as well, if you're looking to add or trim, need to be aware of. Of course, big money are watching the obvious levels, so we'll look at the most obvious levels as well. Implied volatility is something else we'll look at. Expected move for tomorrow, and then we'll finish out with the directional bias coming out of the chain for tomorrow. So let's get started here with the 5-minute chart, peel back that onion, and look at the volume profile. By the way, guys, Tesla is a daily upload. My goal here is 10,000 subscribers, so listen, I appreciate you subscribing to the channel, and I will keep the Tesla videos coming. So listen, let's take a look here. You can see we had this kind of pop for the first, I would say almost half of the day on Friday. A little bit of a fade and then some consolidation, slow upside grinding movement into the close for the weekend. Now, the volume profile is a little bit bizarre looking from Friday. We had a very contextual open. High volume, it quickly fades. That's normal. What we then saw here is I actually want you to take note of this to begin. We saw a bit of a pop and then sustained volume, a quick fade, and then volume really took off into the, I would say, most aggressive movement of the day. And volume actually peaked on this candle here, which ended up being very little net movement with some candles. With some wicks, right? That's a battle bar, meaning a lot of buying and selling occurring on the same bar. That's going to contribute to a lot of volume. But the interesting thing is this here, it's just not enough for me to really assign anything, because while yes, we're seeing this battle bar, the top volume bar, it kind of eked out a red bar. It was very minimal, okay, but it is red. And this here, this increasing volume, it's pretty contextual with all the surrounding volume. The reason I'm going through this, guys, what I really like to see, in case you're new here and you don't really know what I'm looking for, or just a reminder, what I'm really looking for is out of context, high volume, consecutive bars of a particular side or color. That's the most basic form of clear bias. For example, if over here we saw 6 red bars in a row of 1.25 million or 1.5 million in volume, and then it's lower before, and then it fades off and is lower after, very clear bearish bias. The truth is, this here, it's kind of sloppy. I mean, we had a really bullish move, and bulls, what are we really looking for on like this move? We're looking for really clear bullish bias. But in reality, the truth is there's not really enough information surrounding this green region to lead me to believe that the bias here is so ridiculously out of context bullish. It's not. It's truly not at all. But bears, this fade, giving back probably half of that move, what are you guys looking for? Some undeniable, at least some bearish bias, right? It wasn't a tremendously obvious, ridiculous, aggressive move, but you'd like to see some bearish bias. And the truth is, looking through here, you had some pops, but you also had some green. It's just not obvious enough. There's nothing clear enough throughout this entire day that really leads me to believe there's much bias at all. Now, we see some green pops into the close. Again, there's too much of a risk there to assign anything. We're not seeing any consecutive bars. And then this big red bar here, that's of course going to be the rebalancing bar triggered on the closing bell by big money, by algorithms. A lot of buying and selling, typically, I just like to ignore that. Now, that doesn't mean that we didn't get anything out of doing this, okay? Because the stock was up 1.5%. So bulls, we would have preferred to see at least some very clear bullish bias, right? We didn't really get that. Whereas bears, you guys are kind of looking for anything that isn't bullish bias. you didn't get any bearish bias realistically, but again, not a whole lot of bullish bias. So, bears, not all that bad. Looking at the volume profile, bulls, a little disappointing, but still up 1.5% of the day. Okay, let's move on. Let's go to something a little more clear. The very obvious self-fulfilling prophecy psychological levels that the traders, the institutions, the funds, all the big money, pretty much everybody is paying attention to on the most obvious time frame. So we have the 30-minute, we'll look at the 4-hour, the daily, and they're very simple. The white line's the 50 period, the gray line, the 200. Now listen, really interestingly, from Thursday, we were struggling hard to reclaim the 50 period. Well, we tested the 200 again on Friday right off the open Friday morning. It was sloppy, but it held. And then we ripped upside through the 50 on high volume. That's a really, really powerful move. We did not get a retest. I prefer retests because all the confirmation is in the retest and then bounce in this case. We didn't really see that, but that's okay. We can only ask so much out of a single day. So listen, we're in a decent situation, at least on the 30-minute for bulls heading into Monday, but come tomorrow. Bulls, any retest of that 50, again, don't care what volume it tests it on, as long as we see higher volume on a clean, ideally clean bounce away, confirming that 50 period as support. Bears, ideal scenario on the 30-minute come tomorrow, high volume rip down through the 50, retest on lower volume, much lower volume ideally, and then volume pours back in as it rejects and confirms. That could set you bears up for a downside test in the near term of the 200 period. Let's move on to the 4-hour chart and take a look. So looking here at the 4-hour, guys, you can see big news on Friday on the 4-hour. We reclaimed the 50 period on the 4-hour as well. Bulls, not bad. But again, we really haven't seen a retest here either. That's okay. That's kind of expected on the 4-hour after a single day break. Here's what I'm looking for. Really, really simple. Super simple. Bulls, if we retest the 50, I like retests. If we see a retest, obviously I want to see that confirm as support, meaning a bounce away upon the retest. Bears, really simple. Rip down through the 50. Ideally, if we can get a same day retest, that's great. If not, that's fine on the 4-hour. Ideally, just reclaiming the 50 period as resistance to set you bears up for a near-term downside test of that 200 period down around 171. Extraordinarily similar to the 30-minute here on the 4-hour. So let's move on to the daily. You guys can see, on the daily, we have the 50-day moving average, which is heavily watched, currently at 170.81. Okay, stock closed at 177.46 on Friday. Here's the story come tomorrow, Monday. We're currently sitting just under 4% away from the 50-day moving average. A big move. If it comes into play, you guys know that's an area of interest. If you're a bull, obviously you'd like to see that hold as support. If you're a bear, breaking that would be great. But it's nearly 4% away. So what's the immediate story? Well, bulls, you can see the last few trading days, what have we really been struggling with? 180, right? A break and hold of 180 as support is a beautiful day here on Tesla if you're a bull. Bears, ideally, any retest of 180, you'd prefer to see that rejection hold as it's been doing the last few trading days. And just any downside movement down below 175, down toward that 50-day moving average around 170, any movement in that direction would be fantastic as long as you reject 180 off of any new test. Bulls, up and above 180 for as much time as possible in the intraday session, allowing as much volume to come in above that level as possible, confirming that break, that the large sample size of market participants agrees with that. That's good for you. All right, now implied volatility, particularly important if you're trading options. It's on the rise here the last week or so. All right, but still, compared to the last 3 months, it's extremely low. So understand, again, comparatively speaking, the compared to your intended trade time frame is very important of where IV currently sits. But compared to the last 3 months or so, it's low. So you'd be paying a low amount of Vega value if you're looking to purchase new contracts for the next couple of months, at least for intended hold time, right? When I say intended trade time frame, I'm not necessarily talking about the expiration of your contracts. I'm talking about the time you intend to hold them. So Vega value currently being priced in, low, which is not bad if you're looking to buy. Okay, you want to pay as little as you can up front, right? Now, expected move. Let's do a little bit of our educated guesswork that we have to do, a little bit of math here, because we only have weekly expirations on Tesla. Now, May 24th is the next expiration here. And the expected move by, that's a Friday, this coming Friday, right? The expected move by Friday's close compared to this last Friday's close is plus or minus $8.36 a share. Okay, now, we have 5 trading days between now and then. Monday, Tuesday, Wednesday, Thursday, Friday. Divide that by 5 because we're trying to get tomorrow, Monday's expected move. Add back 50% because that initial calculation that assumes 5 red days in a row or 5 green days in a row. That's a silly assumption, right? So I add back, in this market, I'm adding back 50%. That seems to be working the best. And that gives us an expected plus or minus move for tomorrow's close compared to Friday's close of $2.51 per share. That's the approximate volatility expectation being priced into the market. And if you disagree with that, that's good. Along with a directional bias, that's a potential positioning for you, right? You always want to position yourself, obviously with a directional bias that you agree with. That's obvious. Everybody does that. But what a lot of people don't do is position yourself to align with your current volatility bias as well, along with the directional bias, compared to what the market's expectation is. Okay. And that can be done a variety of ways, either by just buying options, right? If you think volatility is going to be higher, or if you think volatility is going to be much lower, but you still have a directional bias, you can use spreads or sell options. But, listen, guys, the world of options is far more complex than just buying or selling. So I encourage you to dive in because there's a lot of ways to position yourself that can be much more effective the majority of the time than just buying or selling calls or puts. Or, I'm sorry, just buying to open and then selling to close, calls or puts. Selling to open, sometimes a great strategy. All right, spreads are often a great strategy. All right, now, directional bias out of the chain here. Let's take a look. So we had on Friday 2.32 million contracts traded. Of those, we had 1.23 million calls, 1.09 million puts. It's slight, but a slight call side bias there on the overall call put ratio. And break it down by time frame. You go to the 0 to 20 delta range. That's going to be the short-term speculators. Okay, quite undecided actually. 460,000 calls, 454,000 puts. Just barely call side bias, but it's pretty much even. Out of those short-term speculators in particular, the overall call put ratio, a little more leaning to the call side, but still, not tremendously so. So interesting chain here from Friday. Listen, guys, if you get value out of the daily Tesla uploads, I ask you to do one thing. It's free. It's the best thing you can do for the channel. Leave a like on the video and then get out of here and enjoy your day. I appreciate it, and I'll see you in the next one.